All right, traders, welcome to today's midday quick recap for Wednesday the 7th. And this is your Tribeca Trade Group midday summary. So, a lot of price action today after the election. It just seems like a lot of money was off to the sidelines. We've talked about all those inflows. I think it was last week, $3.3 billion into short-term, almost like money market, ETFs, but they're really 1 to 3 year Treasury ETFs. So a lot of money on the sidelines, and I think that's kind of fueling today's rally a bit. Also, I've been putting out information. The fund flows from ETFs has really given some revealing information, such as those short-term bond inflows, but also on the tech side, there has been $2.5 billion out of tech in the last week. So people have really run for the hills in terms of risk. And I think that's what you're getting here today is when all that money flushes out, it usually has to come back. And I think that's what we've got going on here today with S&P up 1.1%. But again, so I'll look at the technicals here, but the under the hood movements are so much more revealing than just looking at a couple lines on a page. Again, a lot of people have been apprehensive about both the S&P and the Qs not able to get over the 200-day moving average. Well, now you got it, and I think you got it with conviction. So again, we're only through, it's a little bit after 11 o'clock, so we've got the whole day. But this is a great place to, if you've been kind of adding risk, for me to take off some money. I don't know what the rest of today's going to be. I don't know what the rest of the week's going to be. But this has been a great place for me to to take some money off the table after adding some risk selectively here and there in different places where the setups was really nice. What really kind of helped me the last week is just to take a look at some of the areas that have been performing very well. The Dow, which is up another 1%. Again, I'll say it because I don't really understand it, but I see a lot of people just micromanaging levels in the S&P, and that's really, to me, I'll give you my personal philosophy. That's really not going to help you make any money. Yeah, it's good to look to see where there's support and important resistance, just like with the 200-day moving average. But for me, it's all about the sectors and individual names. I just don't think there can be that much money to be made looking at the S&P and levels. I've been seeing certain areas really look like they've been performing very well, right? The Dow, which I like, I mean, even though I know Dow is a little bit old school, it's an index of 30 names, and they don't rebalance the names. So it actually gives you, I think, a little bit better of a proxy, even though the S&P is broader. But the problem with looking at the S&P being broader is you've got some names going down and some names going up all the time. It's just not going to give you a good look. So I keep saying that. Let's look at some of the performers today. Again, I mentioned tech, which is why we got a little bit more bullish, or why I got a little bit more bullish yesterday. There's been a couple nice trades that were added to by some members in the queues, but you kind of have a little bit of a perfect storm happening today in the software space. This is the IGV ETF. That's your best performer on the day. It's up 3.9%. So why is it the perfect storm? Because you had Twilio report. They're up 32, almost 33%. It's amazing, this Twilio on earnings, isn't it? And then Data as another name. I think there's a third name too, which is just off my radar. But Data is another name that had decent numbers and really, I don't know if they said something on their earnings call, but it's like Tinder right now with these names. And I do have my, I haven't mentioned this index too much because it's been pretty dormant. I mean, I even said this yesterday in the room. I said, what's going on with these software names? Even when the market was rallying a little bit yesterday, the software names weren't doing anything. I had Microsoft set up as a long or possible long, and it just wasn't really functioning. It just wasn't participating. But I guess you needed a couple catalysts and some money being possibly thrown back into this space. But here it is, the business tech index, and just in one day, I believe this is one day, getting back above the 200-day moving average. And here's where it really gets interesting when you look at the individual names, because even GoDaddy is in this index, and that's down on the day. So I'll talk about the trade that we did yesterday, but here's the movers of this today. You can see data is the leader, up 15%. So here's my trade from yesterday, Zen, and this was a trade that we sent out to members yesterday. What caught my eye in this? I've just been kind of following it. It had really good, strong earnings. It's a small cap name, but it beat on the top line, bottom line, and also increased their guidance as well. And the stock did nothing. Here's where it reported earnings. So I sold put spreads because it is a very expensive name to play in options. So I took advantage of the implied volatility and I sold put spreads to take advantage of that. And I'm already, with this name up 9%, it's been a nice trade. So that's, spending a little bit of time there because this group has really been not doing anything. But if you want to be a little bit more larger cap and go over to Salesforce.com, still this name reports in a couple weeks, but I think this name has more to go. It's been very dormant. It just hasn't done anything. Really in the last week or so. So nice to see this group catching. But then if you go over to healthcare, I know Humana, which had a nice looking chart, but this is the IHF. Of course, there are some implications going on here with the election. But look at the healthcare providers. This is your UNH, your Humana, Aetna. Look at this name launching higher today. And then there's also some spillover in the healthcare space. Look at just XLV. Why this gets me excited is because the options are super, super cheap in the healthcare ETF, up 2.5%. Again, not biotech, healthcare. Now there are some biotech names in there too, but a much easier trade in my opinion than XBI. The implied volatility is much lower in XLV than it is XBI or IBB, which are both up, also doing pretty well today too, up about 1.5%. Finally, if you look at the IBD growth proxy, this is FFTY. If you want to see how the IBD 50 names, I mean, nice support here is what I'll say here. Now that these names are starting to go, 3077 could be your stop. Of course, it is way below the 200-day moving average as this group has gotten really beaten up, and there's been a ton of rotations in the ETF world out of growth and into value. But if you like these names, 3078 is your bogey there for support, and that's a nice, easy little trade. Forget about all this overhead resistance for a minute, but if you get a move from 31 to 35, just to the 200-day moving average, that's a real nice move. The three defensive amigos that I've been referring them to, so it's pretty risk on. The three defensive amigos I think are all down on the day. XLP was down. Maybe it's actually flat for the day. Same thing with XLU. Nice move in bonds. I did send out a trade, so two things with the bonds, and then that'll be the end of this video. Bonds are moving up, which is giving a little bit of relief too. We want to see bonds, in my opinion, you want to see bonds go up rather than down. A headwind is when interest rates go higher. Right now, interest rates for the time being are going lower today, which is good. Again, long-term interest rates I'm talking about, not short-term. This is the 30-year. And then finally the dollar, which we saw pretty decent size trade in the UUP ETF. And Thinkorswim is hesitating here, but the dollar is, there we go. Should be adjusting now. The dollar is lower. So again, that's also helping emerging markets. It's not down that much. It's down 40 basis points. We've talked about the dollar and how the move was pretty complete through the value area, the weekly value area, right? This is the 80% rule. Once we're firmly established inside value, we made a move all the way to the top of value in the US dollar ETF, but it's backing away right at resistance. Lo and behold, how that works out. So I established a long trade in EEM. I sent the full setup on the private Twitter, and I'll leave it here for the day. Again, as always, we'll see if we can maintain. We've got some political speeches coming up, but really like the price action and some of the growth, which has been pretty much taken to the woodshed the last couple weeks. So some nice progress there. Have a great day, everybody.